day after the Niners lost the Super Bowl. So I'm sure everyone is just as excited as me because if you're not a Niners fan, nobody likes the Niners. And we got to see some greatness, whether you like him or not. Patrick Mahomes, is, stats don't lie, right? He's like, what, 2 out of the last 4 Super Bowls or winner, led his team in overtime to victory. You just can't deny it. It's kind of like that LeBron James scenario where a lot of people just don't like him, but you really can't deny his talent. Anyways, let's get on to the market. We're about halfway through the month here, almost, and we're sitting here with this developing +4 with the current month trading above the previous month's range, with last month's high being that 49.57 quarter. So we're still getting this continuation, this one time framing higher on the monthly, indicating that there is still a bullish sentiment in the market. Now, something I was reading yesterday, and the reason I'm talking about it is because it's where we finished that 50-50 pretty much over at Spot Gamma with that Brett Kabucha. If you guys will follow him or watch him, I like to watch his videos. He posts a video pretty much every Monday or every options expiration, normally like once a week, but it's always a good watch. And he was talking about typically when you see a call wall get rolled up, which is what we're kind of seeing here, we see that call wall get rolled up. It's typically a bullish sentiment for the market. And so that's just kind of something to pay attention to. He talked about it getting rolled up to that 50-50. So definitely just something that I'm kind of taking into consideration is that when you have a call wall and they start rolling it up, moving it to the upside. And if I'm confusing you a little bit, you're really just going to have to kind of do your own research and try to understand call wall, put wall. It's a little bit more in depth than we have time for right now, but it's definitely something that I would look into as you're trading futures, and futures options are pretty heavily traded and definitely should be taken into consideration. Switching over here to the weekly, we can see we finished last week with a +4 week. We are, still, we did get a cessation of one time framing, but, very marginally, still kind of continuing this trend up. We do have kind of a steep trend starting to form here. You could definitely monitor this trend line. I think that's definitely a solid trend line here that would be, kind of key to pay attention to, should we get a break of that. But with the +4 on the weekly, we want to understand that should we get below that 50.48, which we're trading, a couple points below it right now, that there is possibility for liquidation. And so where that liquidation is going to come from, or where the possibility of that liquidation is going to come from, is really going to depend on some of the order flow. And we'll have to look a little bit closer at the profile in order to kind of determine that. But it's definitely something we want to take into consideration, right? We finished last week as a +4 week, indicating that some momentum traders have come into the market. Now, whether these momentum traders are long, it's long money or short money, right? And the definition of long money is people that have the opportunity or the bankroll to stay in the market for a long period of time. Short money is people that are forced to close, within margin guidelines. But whether they're long money or short money, that's up to us to kind of determine, and up to us to kind of determine where the break points and things like that will be. But we definitely want to know that should we get below that close, then there is some opportunity to shake out some of those short money traders. Now, switching over to the daily, you can see we finished the day as a +4 day as well. Same close at 40. The close was actually 44. The high 48.50. So we're going to be monitoring that 44 level. We're trading at 41 right now, but below that level, there is some opportunity for some downside. You can see we are still in a one time framing mode. Let me zoom this out even a little bit more here. You can see we're one time framing up 1, 2, 3, 4, 5, 6, 7, 8 days in a row. And I know you're probably thinking like, well, these didn't make higher highs, but they are inside. So you could count it as one day, 1, 2, 3, 4, 5 if you want, but they were inside and they're still all moving higher. So you definitely want to be paying attention to that. Remember, the first sign of change comes on the daily. We like to see here on the weekly is more of an indication of some serious change, right? A lot of times you get this back and forth on the daily. Doesn't really give you kind of a good indication of what's actually going on, right? Anytime we could get a liquidation, a cessation of one time framing on the daily, and really next day just gets bought up and continues up, as we saw at the end of the month last month. Now, switching over here to the profiles, a little bit of a review from Friday. For the most part, we did just move higher, a little bit of consolidation. As you see here, we got that P shape early on. And what did we talk about? And the key thing that you want to understand is just because a P shape is short covering doesn't necessarily mean that it can't get continuation. And here's the thought process behind that. And I wanted to go over this, which is from the basics, and it's a basic understanding. So if you have been working with the profile for a while, you understand it. But for those of you guys that are new, when we get a P-shaped profile, we know that most likely it's short covering. But what happens is all of the people that had the opportunity to buy lower are now seeing the price higher, right? And so they weren't buyers, and they're just sitting on the sideline saying, like, I'm not buying it until it comes down here to 5,000. Well, now it's up at 520, and a lot of times they feel like, oh shit, I missed my chance. Now I'm going to have to jump in. And that's what looks like happened on Friday. And you can kind of see we left a lot of mechanical references behind as the market kind of squeezed up and then finished up at the high, closing on that double distribution. And that's, to me, kind of what it seems like happened on Friday. You got a lot of people kind of ripped off the sidelines, and these people are laggard buyers, people that are late to the party, right? If they were early to the party, they've been buying here or lower. But what happens is get these shorts that are stuck from this distribution here, they start to cover, and all of a sudden these people that didn't buy were like, oh dang, I missed my opportunity, and they jump into the market, and it causes the market to trade higher. And so that's something key that you want to be paying attention to, or just have a clear understanding. If you see a P-shaped profile, it can bring in new buyers off the sideline, just like a B-shaped profile is selling, right? When we get this kind of B-shaped profile and you start to see this B shape, that doesn't necessarily mean that, okay, well, all this selling is weak, then I don't have to worry about the downside, I'll just start getting long. What it means is a seller came in, moved price lower, and now most of the selling going on is old business. Now, if a new seller comes in off the sideline and says, dang, I missed my shot to sell up here, that can cause the market to get continuation to the downside. And so those are two kind of key understandings of those two specific profiles, the P-shape and the B-shape profiles, that we tend to see pretty much every single day, right? For the most part, every profile has a P in it somewhere or has a B in it somewhere. You can, just using Friday as an example, we see kind of this P-shaped profile, and then the market squeezes up and forms another P-shaped profile, right? And this gives us a double distribution profile. And a lot of times that's how a double distribution profile is formed. Now, moving on to this double distribution profile and some key levels for today. And you can see that weekly plus 4, 50, 44, the settles the same exact, so it's right underneath of that. But with our double distribution, some things that we're going to want to do is kind of treat this as 2 days, because we can kind of assume a lot of people got stuck short here, right? And a lot of people lagged long into here. So we've got a lot of longs up here, weak longs, and a lot of weak shorts up here. So with our mechanical references sitting at the 30 and the 23, that seems to be the spot that these guys here would be stopped out at. So if we start to break, and you can see there's a little bit of Brad prints right here, and even a single print right here at the 35. So if we start to break this 35, I think the target becomes this 30 and this 22. And I know this is kind of different than how we normally look at the profile because of how value is moving, but today is kind of one of those key days where we really want to be paying attention to volume. Something that Roach and I talk about all the time is that If you're watching the profile and not using volume, you're just an idiot. And that's really because volume is part of the TPO. Anyone who says they only watch the TPO, they don't look at volume, is really just not using the profile properly, as time represents opportunity, or time represents value, price represents that opportunity, and volume is your confirmation tool. Well, volume came in this upper distribution, and so that's something that you're going to want to be paying attention to. If we kind of assume that the buying that came in was laggard buying and a lot of it came in at the high, well, then below this 35, we probably get some liquidation. So that what we have to do today is pay attention to tempo. And I am kind of assuming that tempo is going to be nice and slow because we have news tomorrow. Not much news today. There's a Fed speaker on right now. There's another Fed speaker on at noon, and then the budget balance at 2 p.m. Eastern time. Not much news. I think tomorrow we have CPI or PPI, one of them. I'll have to double check. And that, I think, is going to be really where the tempo picks up. So tomorrow pre-market. And so today's plan is to watch and wait until value develops, right? And so if you are going to be a buyer, I think your better odds of buying are going to be somewhere in this lower distribution, unless we don't break this 35, right? If we come in and can't break this 35 and the market starts to get, kind of firm up above this weekly +4, then we get that nice opportunity to get long. So we're waiting until this 54, right? Even if we break this value area high for play number 1 here to start the session. But if we can't do that and we start to look a little bit weak, I think there is some opportunity to try to fade down towards that 35. Now, I don't know if I'm going to be jumping on that short bandwagon. It's really going to depend on tempo, and it's going to be hard until the market kind of opens up. But I am going to be looking for that opportunity here. And I'm going to be looking for these laggard shorts that got in here to cover their positions, right? It'll depend how fast these guys that are long. Remember, we got longs here, shorts here. So these guys probably cover their positions, which means that they'll come in as buying. And then these guys that got long here will either double down here, or they'll be stopped out on the way down and then maybe try to get back in at this area that they wanted to get in before the market started moving up, right? Because we assume they're sitting on the sidelines and then they started to rush in here as the market started to catch some upside. Now, that's kind of the waiting for it trade here. So you've got kind of two opportunities. And let me kind of clean this up so we can snap a little picture. Morning, Kumar. Why only 7 viewers? I don't know, man. Who knows? It's a crazy world. So this is 25 to 27 is really going to be kind of your long zone on a deep pullback. So if the market were to pull back, you'd look to get long there. You'd look and be targeting the middle of this distribution, which is that 35, and then be targeting that weekly +4. Now there is some sell opportunity, but I'm going to put it in yellow because it's more of a caution look, right? And that's going to come underneath of this 38.37, and that would look to bring you down to this mechanical reference, which is sitting here at 30. So a little bit of caution exercised in between these two distributions. Now, if we pick up tempo, right, if there is a lot of tempo, you really don't want to be taking this long. So should the breakdown happen fast, or should tempo be quick, you don't want to be taking that long in this lower distribution, because we're kind of assuming that these are all laggard players anyways, right? We assumed that most of this upside was old business, and then we got laggard longs into the highs, and we're below that weekly +4, indicating that there is some possibility of some deeper pullback. So we'll take the red here, and the red is going to indicate our tempo. And so if we get a breakdown really below this 22 level, then there's decent odds that we continue down towards this lower distribution. And that can be kind of a slippery slope here. So you definitely want to be paying attention, or at least cautious of today. Tempo will be the most important observation today, right? And I do hear a lot of people like, oh, well, what's tempo? Teach tempo, explain it. It's not something that can really be explained. If I'm being honest, it's really just something that has to be observed and understood over time, and you have to kind of monitor the market, watch the market, learn it, and then look for the tempo. That could be the notifications. You know what, Kumar? I'm really terrible when it comes to like YouTube technology and like massing it out there, putting the right tags on it to make it get to the most people. I really don't care, if I'm being honest. I really just care about putting out quality information. And this morning wrap up kind of gives us an ability to go back and look at our trade plan in live time and kind of be like, okay, well, what was I thinking before the market opened? And did I follow the plan that I had made objectively before I started trading? Now, there is one more chart that we always like to look at on Monday, and that is our COT report. Let me pull up the COT chart. Morning, Thomas. Morning, Lecker. And so with our COT, we're looking at this profile here. And so what we can see here is we get asset managers cutting longs. So this is going to turn into selling, right? And then adding shorts, which is also going to turn into selling. Well, I've kind of identified the area here where I think that that's where this took place. I think they started cutting longs here. So the liquidation came in, market came back up, and they continued to add shorts here. And that's at 49.75. And so below that 49.75 to me is really where the break point of the market comes. If we should get back below that 49.75, I think we get a deeper liquidation down to that 4900. So there's some good opportunity, and I have some alerts set up where we could make a nice 75-point trade here should we get a break below that 49.75. Now, we're going to want to massage into that. We're going to want to kind of pay attention and see what's going on. Of course, we can't just blindly throw any trades on, but I definitely think that there is some opportunity should we get that opportunity. And we've seen this where we've seen buying, continuous COTs previous, we've seen buying there. So definitely something I think that we want to be paying attention to. But other than that, pretty neutral, not really much of importance. We kind of see this continuation move above in balance. And, so these profiles will be together come the next COT report, which is solidified on Tuesday. So tomorrow, so we'll get today's profile and tomorrow's profile added to this one. And you can see here like a combined distribution where most of the volume is at down here, this 45.12. And that's why I'm saying a break below our 25 down to that 12, that's where we've spent the most time. That's where we've had the most volume. That's what kind of makes sense. If they don't hold that, we've got some single prints down here from like 5,000 to 5,005. But, whoa. Everybody's blind. But other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan. And I will see you guys tomorrow.